CrowdStrike became infamous for its role in the massive outages that kept flights grounded and industries in limbo. The disaster threatens to cause customers to leave CrowdStrike's cybersecurity platform altogether. Even in the best case scenario, customers will want concessions from CrowdStrike to stick around. That's why the latest investor update from CrowdStrike was so interesting for me. I wanted to see what the fallout was from the devastating event. You might be surprised about the outcome. I will share it with you in this video to be sure. Also, I'll update my rating on CrowdStrike stock. Remember, I did not have CrowdStrike stock rated as a buy, and the main reason was due to the valuation being too rich. However, the stock is down significantly since the disaster, so does that change my rating? I'll answer that question in this video as well. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Alright, so in the second quarter, the company delivered $3.86 billion in ending annual recurring revenue, which was up 32% year over year. However, the key number I want you to pay attention to is the net new annual recurring revenue, I should say, which came in at $218 million, which was up by 11% year over year. Now, if you compare that with the first quarter of this year, which was before the disaster, the company delivered $212 million annual recurring revenue, which was up 22% year over year. So it went from 22% year over year growth down to just 11% year over year growth. And that's one of the impacts of the outage. One of the impacts of the disaster was CrowdStrike wasn't able to close on as many deals as it was closing on in the first quarter of this year. Also, the company reported an operating profit margin of 24% and diluted earnings per share of $1.04, which was up by 2 percentage points year over year, and the EPS was up by 41 percentage points year over year. Compared to the previous quarter, its operating profit margin was up 5 percentage points year over year, and EPS was up 63 percentage points year over year. And finally, the company delivered $272 million in cash flow, which was up by 44% year over year compared to the previous quarter, which was only up by 42% year over year. So cash flow, one of the factors that remained solid for CrowdStrike in the latest quarter. The biggest outcome I noticed was in net new annual recurring revenue from this segment, which was only up 11% year over year compared to the 22% year over year growth in that same category in the previous quarter. Looking ahead, CrowdStrike downgraded its full year 2025 total revenue expectations, now forecasting total revenue for fiscal year 2025 of $3.89 billion to $3.902 billion for 2025. That was considerably lower from the forecast it gave just a few months ago. So just a few months ago, in the first quarter earnings release, it forecasted full year revenue of $3.976 billion to $4.01 billion. And you can see that down by over $100 million from the previous estimate. Also, the company forecasting non-GAAP income from operations in the range of $774 million to $784 million. So between, let's say, $780 million at the midpoint non-GAAP income from operations expected for 2025. And that's lower from the previous estimate with a range of $890 million to $916 million. So let's say the midpoint here is $900 million. Let's round it to $900 million. Was the previous estimate for income from operations. That $900 million is now downgraded to $780 million. So a $120 million decrease in income from operations, a more than 12 to 15% decline from the earnings expectations now, income from operations expectations now for 2025. Also, if we look at EPS, earnings per share estimates, that also decreased to $3.63 expected, and that was down from $4 expected at the midpoint just prior to the disaster or 3 months ago when the company gave its first quarter fiscal year 2025 investor update. So non-GAAP EPS going from a midpoint of $3.98 all the way down to a midpoint of $3.63, a roughly 10 percentage point decrease just from 3 months ago of EPS expectations. So across the board decreases here from CrowdStrike, and undoubtedly this was due to the disaster and the fallout from the disaster, customers canceling, switching providers, customers calling CrowdStrike and asking for concessions, bigger discounts, kickbacks, rebates, refunds, and all of that as a result of the disaster. Still, longer term, if you think about CrowdStrike, it's still an excellent company generating strong income from operations, strong growth in free cash flow, strong growth in revenue in an industry that's expected to grow for the next decade or two. So all of that is still intact. The long run tailwinds supporting CrowdStrike's growth are still intact. The competitive dynamic, however, the company-specific dynamic worsened considerably for CrowdStrike in the quarter as a result of the disaster. Now, I already did not have CrowdStrike stock rated as a buy. Despite its excellent prospects even before the outage, the stock price was very expensive, and I considered it a hold or market perform, and I last updated that on June 4th. Now, even after the stock price decrease as a result of the disaster, CrowdStrike is still trading at an expensive valuation, a forward PE of 64. So even after that, the stock price still seems expensive to me, and given the recent headwinds, given the continued fallout from the disaster, I'm going to reiterate my hold recommendation. I would not recommend this stock as a buy right now, and I'm updating this on September 2nd. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.